Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look again on the euro currency. Well, lots of things to discuss right now, so better it will be if you will read the report. So because although I hate to discuss the geopolitics, but currently we stand in a situation where it just intrudes in the normal market behavior and becomes the determinant factor of the market action. So actually, if you'll take a look at the daily chart of the euro currency, yes, on Friday we said that it might be drop lower, as we were watching for and now are watching for an area around 113, 112.60 area. So we suggested that high wave pattern should be broken down, but we thought about a bit different reasons. But as you see, when I am taking a look at Friday evening on the markets, I see curious action. Gold was rising, interest rates were dropping, and immediately I understand that something is going on with the geopolitics tensions. So indeed, in recent news, you see what's going on, that tensions is rising. And currently, I'm intentionally to briefly watching for media materials that I see on the internet concerning the possible tensions in Europe. So the one thing that, guys, seems from this overall covering of the media of this question, it's become obvious that it is very narrow and has very short-term vision. So most investors treat these tensions as in a way of the past, as it was when the United States invades in Iraq, in Libya. So the war should happen somewhere far, far away, and maybe some light echo will be in the papers and in the internet that we will heard something, but it will happen somewhere. So hardly it will make impact on the United States, United Kingdom, and so on. But guys, as Mr. Carlson told in his show yesterday, Fox News, that Russia, unfortunately, is not the Muammar Gaddafi and not the Taliban. So it is quite different military component. And the one thing that I just could say is that if something will start, and I hope that geopolitical tensions will ease, but if something will start, it will not be somewhere far away. It will cover the whole world. And the echo will be not just with the news and papers, but this will be really not pleasant things. Definitely, it will cover the whole Europe, including United Kingdom. And, well, it's just investors do not understand what really could happen. It's very narrow view currently on the markets, on the perspective of this contradiction, and then this what we see in Europe. And that makes me think. So we're not speaking about the geopolitical components, and we're not trying to dig into politics. We're just interested in how it will impact on the markets. And from the market perspective, what I could say is that definitely, if something will start, it will make impact on the value of the safe haven assets, Japanese yen, gold, Swiss franc, and United States dollar. It starts rising, and you could see even currently the first impact already stands on the market. But as soon as the conflict will be more evident, and we will see what Mr. Putin prepares to its so-called partners, I think, my personal opinion, is that currencies, the safe haven currencies, will start losing the value, and only gold will remain on the surface. So, unfortunately, it seems that we're coming to the period where the only asset that we will have, it will be the gold. Well, but in the first stage of this situation, when tensions still will be in kind of the rhetoric and so on, the currencies, the safe haven currencies, will be appreciating. So that's what we'll see currently on the United States dollar. So what we could do in the current circumstances? Well, first of all, the technical analysis currently definitely will take the back seat, and the perspective of the euro rate change somewhere in the end of 2022 currently, well, seems too far if you do not know what will happen within a week. So I think that on a daily euro currency, we could keep going for a while with our scenario, because although the geopolitical tensions is rising, the overall market performance is not breaking yet the scenario that we are following. Actually, we expect the euro currency to see around the 50% support around 113 and major 618, because it corresponds to the bottom to the left, and potentially we could get the reverse head and shoulders pattern, especially on the recent rally that we've got, right? So I think that we could keep going with this scenario and watch what will happen around the predefined levels. Besides, as you can see, the MACD indicator and the oversold on the daily chart comes approximately in the same area. So that is solid support area where potentially we could get even the bullish grabber on the daily chart. And I think that we should keep an eye on it. So, and then we will see what will happen. If market some drastically just collapse for this area, it definitely becomes that market going lower to 109 area, it's next support. But if we'll see some bullish signs on the intraday charts floating with the MACD, bouncing up from the oversold, so that's at least will be the chance trying to take the long position with the predefined stops. So I think that we should keep going with the scenario that we have, at least until it is valid. On the 4-hour time frame chart, as we suggested, as you can see, market has almost broken the confidence support that we have mentioned. And now the target is 113.13 of this so-called double top or high wave pattern that we discussed. It's almost done. So here's a few pips stand till the target, but, well, this low stands very close to mostly. We could say that market should complete it within a couple of sessions. On the hourly chart, additionally, finally, we've got the fib extension, which is the ABCD pattern down, and well, OP gives us the same target. It's 113 approximately, 92. Taking the precision, 112.92, 93. So the XOP stands at 12.15, so it's slightly lower than the 618 support, and I suspect, guys, that if market will drop to the XOP, it will be not occasional, because as you understand, the XOP stands under major support and deep below the oversold level. So in the normal circumstances, euro currency should not complete this target. So normally, if we wouldn't have any geopolitical component, I would say, guys, let's watching for 113, flirting with the MACD, catching the grabbers, and watching for possible bullish reversal patterns around this area, and try and take the long position based on the possible reverse head and shoulders that we have on the daily. So that's approximately that we intend to keep an eye on euro currency. But guys, also don't be deceived with information that you could read in mass media. It's just because, well, this is very narrow picture that they provide. Actually, everything stands much wider, and effect might be really stunning just because nobody is preparing for that. So because it was no any example in the modern history when something of that sort was happening. So that's why actually I suppose that it might be the really stunning effect on the markets. If really, I hope that it will not happen, but if it will happen, guys, it will be really awful. So because, well, just in two words speaking, situation stands so that Russia can't retreat anymore, because it was retreating since 90s, when it was the Warsaw military bloc has been falling apart, and the Soviet Union fall apart, and then the new members starts to accepting to the North Atlantic countries union. So now the situation is still so that Russia can't retreat anymore because it has no space to retreat, but the counterparty doesn't agree to compromise. So and this is really bad situation. So anyway, we'll see what will happen, but just keep nose to the wind and be careful when you're trading and trying to minimize risk as more as possible.